Welcome to our deep dive into the UK's 2024 economic landscape. From inflation to international trade, we explore the forces shaping Britain's financial future. What's really going on with the UK economy? Join us as we unravel the complex threads of this economic tapestry, the current economic climate. As 2024 unfolds, the UK economy finds itself grappling with significant challenges that could shape its future. After years of turbulence, recent data reveals a troubling stagnation in growth, with GDP barely inching forward. A report by the Office for National Statistics highlighted a concerning trend. The economy has not seen meaningful growth since 2022, and the recent figures from early 2024 show only a modest uptick in GDP by 0.9%. This stagnation is more than just numbers on a chart. It's felt on every street corner and in every household. For example, the construction sector, often a bellwether for economic health, saw output fall by a significant 1.3% in the last quarter of 2023. Retail and wholesale sectors too are reporting decreases, a direct hit to the backbone of the UK's domestic economy. Why is this happening? Analysts point to a combination of global economic pressures and internal vulnerabilities. The aftermath of Brexit continues to cast long shadows, disrupting trade and investment flows. Additionally, global economic slowdowns have dampened demand for British exports, affecting overall economic momentum. The real-world impact is palpable, from small businesses struggling to find their footing in a shaky market to young professionals facing an uncertain job landscape. The ripple effects of this economic slowdown touch all corners of society. As we delve deeper into 2024, the question remains, can the UK navigate these troubled waters, or are we witnessing the early signs of a deeper economic slump? The answers to these questions will not only define the economic narrative for the UK, but also the livelihoods of millions of its residents. Segment 2: Inflation and Consumer Spending. Inflation in the UK has been a roller coaster, particularly impacting consumer behavior and economic stability. As of mid-2024, the inflation rate has steadied at 2%, finally aligning with the Bank of England's long-standing target. This decline from a peak of 11.1% in late 2022 marks a significant relief for consumers, but the landscape remains complex and precarious. Despite the headline rate cooling off, not all components of inflation have eased uniformly. Core inflation, which excludes volatile items like food and energy, stood at 3.5% in June 2024, underscoring persistent price pressures independent of external shocks. This stickiness in services inflation is significant because it reflects more than just transactional activities. It indicates ongoing domestic economic pressures such as wage demands and rental prices. For example, as businesses face higher operating costs, these are often passed on to consumers, affecting everything from restaurant bills to consultancy fees. Moreover, the Bank of England has maintained a cautious stance on interest rates, currently at 5.25%, wary of reducing them too swiftly in an unpredictable economic environment. This cautious approach, while prudent, has a direct impact on mortgage rates and loans, influencing consumer decisions about spending and saving. In essence, while the overall inflation cooling offers a sigh of relief, the uneven decline across different sectors continues to pose challenges for economic recovery. The high cost of services, coupled with cautious monetary policy, is shaping a new normal in the UK's consumer market, where caution and complexity govern spending behaviors. Business Insights. The pulse of the UK's businesses provides a clear snapshot of the economic pressures they're facing in 2024. A revealing survey by the Office for National Statistics has shown that almost 2/3 of businesses express concerns about their prospects in the near future, with 20% specifically worried about falling demand for their goods and services. This sentiment is particularly strong among small to medium-sized enterprises, which are often more sensitive to shifts in consumer behavior and economic policy. What's behind this growing anxiety? For many businesses, it's a cocktail of rising operational costs, regulatory uncertainties, and sluggish market growth. The construction and manufacturing sectors, for instance, are feeling the pinch as global supply chain disruptions continue to ease only marginally, affecting material costs and delivery timelines. Retailers, too, are not immune, with high street stores battling the dual challenges of online competition and cautious consumer spending. Amidst these challenges, there's also a story of adaptation and resilience. Some businesses are pivoting towards more sustainable practices and digital transformations to hedge against future disruptions. For example, a notable trend is the increased adoption of AI and machine learning to streamline operations and enhance customer experiences, a move that reflects broader shifts within the global economy. Yet the broader picture remains one of caution and concern. As businesses navigate through these turbulent times, the effectiveness of government policies intended to stimulate growth and stabilize the market will be pivotal. The coming months will be crucial in determining whether these measures can truly ameliorate the concerns of businesses, or if more targeted interventions will be necessary to prevent a deeper economic downturn. Government and policy responses. The UK government's response to the economic slowdown has been a complex interplay of fiscal strategies and monetary policies. In 2024, the Bank of England has maintained interest rates at a relatively high level of 5.25% to counteract inflationary pressures, particularly in the service sector. This careful balancing act aims to stabilize the economy without stifling growth. However, the Monetary Policy Committee has signaled potential rate cuts by the end of the year if inflation continues to align with targets, projecting a decrease to 4.75%. Simultaneously, fiscal policies are under the microscope. The government, through its latest budget announcements, has attempted to stimulate growth by addressing both short-term recovery needs and long-term structural challenges. Measures have included increased spending in public services and infrastructure, which are essential for revitalizing economic activity. Yet these initiatives come at a time when public debt remains a concern, necessitating a delicate balance between spending and maintaining fiscal prudence. One of the most debated aspects has been the government's approach to supporting industries hit hardest by the economic downturn, such as manufacturing and construction. While some argue for more aggressive fiscal stimulus, others caution against the long-term implications of increased national debt. As the UK navigates these economic challenges, the effectiveness of these policies will be continually evaluated against the backdrop of global economic shifts and domestic political pressures. The stakes are high, and the outcomes of these policy decisions will likely resonate through the economy for years to come, influencing everything from employment rates to business confidence and international investment. The road ahead. As the UK stares down the remainder of 2024, the economic landscape is rife with uncertainty and potential pitfalls. Economic forecasts have been cautiously optimistic, predicting a modest growth of 0.7% by year's end. Yet these projections come with significant caveats and are subject to global economic influences and internal policy effectiveness. The challenges are manifold and multifaceted, ranging from persistent inflation in key sectors to geopolitical tensions that could disrupt trade further. The real estate market, often a bellwether for economic health, shows signs of cooling, which could have ripple effects on household wealth and consumer confidence. Similarly, the labor market, while recovering, still bears the scars of recent disruptions, with certain sectors experiencing shortages and others an oversupply of talent. Looking ahead, the UK must navigate these turbulent waters with a strategy that encompasses not just immediate economic stabilization, but also long-term sustainability. This includes bolstering key industries, enhancing workforce skills, and investing in technology and infrastructure that can drive future growth. The government's role in shaping a conducive regulatory and fiscal environment will be crucial, as will its ability to foster business confidence and consumer spending. Thank you for joining us in dissecting the UK's economic challenges and opportunities in 2024. As the situation evolves, we'll continue to bring you the latest insights and analyses. Don't forget to like, subscribe, and comment with your thoughts or questions. Stay informed, stay engaged.